Mr. Morgan, what are your thoughts on the performance of silver during last year, 2013?
Well, silver's been in a consolidation. I'm not happy with the price performance, but it's not unexpected. We had a huge rally from the $19 level to 26 and went all the way up to 48 at the end of April 2011. And from that point until now, we've been blasted down a few times. We're holding the $26 level for quite some time. It was smashed through that on heavy volume. Looked to me on the charts like it was managed down or forced down. Gold happened to take the same kind of hit around the 1550 level. I think that broke the psychology of the market. And from that time until now, in both gold and silver, the psychology has been very bad. And so the price is reflecting that. Yeah. Most of the bulls that are believers are still holding and maybe held at higher prices. And there's no new buyers because the new buyers do not do what they should do. When you have a low, they should be buying, but they're new and they're like, well, geez, I'm glad I didn't buy gold. Look at what happened. It was at 1550 and then it got hit, or they might not say hit, it fell down miserably. It's in the 1300s, below 1300 at times. I just don't know about gold. So they double think themselves. And because of that double thinking, they stay out of the market. And once the market gets above 1550 in gold and 26 in silver, and things look a little brighter, well, there'll be more active participation in the market. So we're in a lull right now, not unexpected by me. I have a pretty good feel at my age how markets move, not only on a chart way, but also on a psychological way, which is more important, really. The psychology is kind of printed out in the chart patterns.
One big story during last year was the investigation of the CFTC and its end. Would you like to comment on this?
Yeah, it's a tough one. The CFTC came out. They really didn't say there was no manipulation. What they said is after the 5-year investigation, what they determined there was no grounds for prosecution. That's entirely different than saying there's zero manipulation. They didn't say that. So they probably had evidence of manipulation, although they're not going to say that, but I will. But it wasn't at the level that they deemed required further action. So they dropped it. And that, to me, is, can point in several areas. If you go to GATA, basically what they say is that these large money center banks, such as JP Morgan, basically have large short position of metals, and that the US government and the CFTC are basically a government function, and they're not going to beat up on themselves. That, in other words, they're just going to kind of make a statement like they made, that we've looked at it, we don't see anything that requires us going further. Case dropped. Of course, this upsets those that look at how the market was manipulated and why, but they're the authorities. They're the ones that make the final determination.
Would you say that naked short selling in precious metals and commodity markets in general should be abolished?
I like the way it was set up originally. I think the intent was very sound. If you're a farmer and you grew wheat, you could take off a hedge and make sure that you were going to make a profit in your commodity, and the speculators filled the gaps, so it was a liquid market, and all that was well and good. Now with the high frequency trading and all these quants and derivatives and on it goes, it's been abused drastically. So the original intent was sound, but now it's been abused in a very dramatic manner. Am I in favor of doing one thing or the other? I think at one point we're going to go to a cash market only, and that's the fairest for some markets. For example, eggs used to be on the futures exchange. Milk used to be on the futures exchange. Well, we still enjoy eggs and milk, and they're in a cash market only. So there's nothing wrong with going to cash market only, and that's kind of what a lot of the proponents have been asking for, is limits to the amount of short selling that could be done. Because if you only have X amount of silver, then why can you sell an unlimited amount of it that doesn't exist? So it's only common sense, silver, gold, wheat, whatever the commodity, that there's common sense boundaries to the amount of selling that can take place. But again, those are being negotiated. Whether they'll take hold could be determined in the future. And even if they were to be implemented, would they still be abused? And if they were abused, would the CFTC do anything about it? My view is that they'd still be abused and nothing would really take place.
Would you say that free markets need regulation in this?
I'm a free market proponent, and I think the free market will take care of it overall, and I think we'll go to basically a cash market. I think there could be two markets. There could be an over-the-counter derivatives market for gold and silver, but the exchanges may just basically give up and say, you know what, we're selling out the little bit of gold and silver, whatever, and it's a cash and carry market. So you would deal directly with like a miner or a smelter or maybe a bullion bank. And I think that, again, like the eggs and milk market, they go away in the futures exchanges, but they still exist and they're still traded.
Do you expect that the paper markets in silver will be crashed in favor for physical silver?
Yeah, I think at some point there'll be a big discrepancy between the paper market and the physical market, and the silver physical market will trump the paper market. And how that is resolved in the futures market will probably be by cash. In other words, you get paper for paper. You hold a paper contract, you can't settle it in silver, you have to settle it in cash.
What are the main price drivers in silver? And would you say that silver is so attractive that it could be the investment of this decade?
Well, the main drivers for silver are twofold, industrial and investment. Investment's primarily the most important, because that's what will take the price far higher. And is it the investment of the decade? I did a study in 2010, and very difficult for me to say I don't know anything about the silver market, but that's the approach I took. I said, okay, it's been a good decade from 2000 to 2010. Where are we going over the next 10 years? Would I invest in silver or not? And based on that study, I felt that silver over the next 10 years, from 2010 to 2020, was actually better than it was in the previous 10 years. But now we're almost 4 years into that market, and I'm still very bullish. It probably could be one of the investments of the decade, but I'm not as bullish. The solar panel activity was projected to be like 130 million ounces a year. It's about half that amount, probably going to level out here. Investment demand has fallen off somewhat, but I'm still very bullish on it, and I still think it's probably one of the best assets you should have. And as much of a silver bull as I am, I've never advocated for anyone to buy 100% of their assets in silver. I've never said that, and you shouldn't. You should diversify. But within the context of precious metals, I think everyone should own them, and I think you should have up to 20%, 10 anyway. And so if everyone did that, there'd be you couldn't put a price on the price of silver. But since only about 1% of the world has anything to do with the precious metals, let alone in physical form, the prices are where they are. So it's very easy to see a doubling from a 1% to a 2% could drive the price of gold and silver far higher from where they are now, and I believe that's in our future.
Given your experience of 2010, would you say that to analyze silver is more difficult than to analyze gold?
I think silver is far more difficult to analyze than gold, but that's my opinion. But there's a lot of factors, because not only do you have the psychology of silver as money, and there's a lot of people that don't think it is, it's only an industrial commodity, and then you've got major players that produce these reports that view silver as basically just a commodity, not an investment. So you got to kind of weed out, how much of the market is driven by investment, what's the psychology, what are the true numbers, and I think it is more difficult to analyze, but it's fun. I like to do it. Don't always get it right, but I enjoy it a great deal.
Okay, thank you very much.
Thank you.
Ladies and gentlemen, this was our special interview with David Morgan from Matterhorn Asset Management, and I say thank you for watching.